Welcome to the Eltropy Exchange podcast, where leaders of community financial institutions connect, learn, and stay ahead. In each episode, we sit down with industry executives, innovators, and experts for candid conversations about the challenges and opportunities shaping CFIs today. At Eltropy, we believe conversations matter. Let's dive in.
Good morning, good afternoon, good evening. Everyone, welcome back to the Eltropy Exchange. My name is Mike Pupil, Vice President at Eltropy, and I have the pleasure of welcoming our next guest, Jason Johnson. Jason, good to have you aboard, buddy. Thank you for joining us today, sir.
Yes, good to talk to you again. I will say, it's weird to talk to you like this. I've been listening to some of the podcasts back, and I listen to everything at 1.5 times speed. So you're talking incredibly slow right now. So if you can try to do 1.5 times speed, it'll make more sense. I'm used to hearing you that way.
That's where I sound like a chipmunk and you just
Yes, a
ultra
little bit,
speed.
yeah.
That's awesome. That's amazing. Well, we'll try and keep it at normal speed so that way, if you increase it to 1.5, it's not like the Micro Machines guys. And I probably just dated myself for those people that know who that auctioneer was back in the day in the 80s. Oh my God.
Yes,
It feels
there you
so
go.
weird saying that. For those watching, those listening, Jason Johnson is the Senior Director of Digital Strategy and Project Manager at KEMBA Financial Credit Union. Jason's a graduate of Ohio University, where his banking and credit union career began with an internship at that very same university during his sophomore year. And then after graduating, spent, a year at a large national institution before being called back to OUCU, where he served for 11 years in different roles, including things as like member service representative, charge of electronic branch, retail branch management. Today, Jason joined KEMBA Financial Credit Union roughly 10 years ago as a virtual sales manager. He's progressed through the leadership roles, overseeing virtual branch, the call center, service and sales, the retail branch network, and the interactive teller team, which is a big initiative that you've been tackling, Jason, which I can't wait to talk about. He's recently been promoted to the Senior Director of Digital Strategy and Project Management. So let me be the first, or probably not the first by the time we record this, but let me be the first on a podcast to say congratulations, Jason. Nobody better deserved. And that is exactly what we're going to be discussing about today on the podcast.
Yeah, I appreciate it. I appreciate being here and looking forward to talking.
I should mention the most important part of your resume. Also married and proud dog dad of 3 dogs. I can't
That is
forget the
correct.
family part.
That's right. So the one thing that's important, if watching, I even put a picture of me and my wife behind me, so I wasn't. But the Ohio University mug is still in the frame, so that's the most important. I've had a relationship with it for 30-ish years, where me and my wife only 6. So I've got the more important one up there now. I can't. My wife now can't listen to this, but
Yeah, we may need to edit some of those pieces out, Jason.
yeah,
We've
right.
got Valentine's Day coming up in 4 months. You've got a big apology to make over there.
There you
The
go.
6 years are more like 60, and rightly so. And so,
Right.
let's save ourselves both some heartache at this point. Jason, I start this podcast every single question the same way. Let's go back in time. Let's talk about how you got involved into the credit union industry. What was the initial start for you as a little boy? Did you grow up saying, I can't wait to work for a credit union at the ripe old age of 5, or how did it come to be?
Right. Yeah. So it's funny. I was listening to the episode you did with Brian Waldron and from Dort Financial, who I had a chance to meet at the Eltropy event, and our paths were like strangely similar in a strangely similar timeline at Mid American Conference rival schools. So he was talking. So whenever I went to college. My entire path was to become a basketball coach. That's all I wanted to do in life, and was working for our men's basketball program at OU while I was there, and was also working at a driving range during the summers, just to make a little money for side quests that happen in college. And had a small disagreement with the owner of that driving range, and was asked not to come back between my sophomore and junior year, and was just looking for a job. just looking for anything that would pay during the summer, and had a friend say, the credit union down there is hiring interns. Why don't you see if you can get a role there? And applied, got the position, and fell in love very quickly with that ability to be a part of a community, be a part of the internship program there was really great, connecting students with students to open new memberships, and fell in love with it, and decided that basketball career, trying to recruit 17-year-olds and living your entire life around the whims of whether or not a kid wanted to go to your school or not was not for me, and decided to stay in the banking realm, and here I am, a little over 20 years later.
I love it. I love it. So basically, by accident, but with purpose, and it all came into the love affair of the industry. It's so
Exactly.
amazing. I love that we start each podcast asking this question, because the stories are somewhat similar in the sense that it wasn't really a plan, but then once it happens, then you really kind of get into the groove, and away you go. And then before you know it, it's a decade later, and
Yep.
here you are having experience in multiple roles. I know at the beginning of, or during the introduction, I also mentioned that you had a year at a large national bank. I know it's only a year, and obviously the vast majority of your time has been spent on credit unions, but even in that short period of time, did it have an impact to you? Like, what was the difference between the 1 year that you spent there, the last 10 years that you've spent, or 11 years now that you've spent on the credit union side?
Yeah, so it was whenever I left Ohio University Credit Union, and went to the large national. I was actually working in subprime mortgage lending, which obviously, just first off, did not necessarily make you feel great. But I walked away, especially coming from that credit union experience where there was so much focus on what are you doing right for the member? How are you supporting this member's financial well-being? And then hearing stories of my peers talking about the car they were going to buy with the check they were getting because they sold a mortgage that was going to put somebody bankrupt into bankruptcy a couple years later. It just felt incredibly dirty. I was coming home feeling as though I needed a shower, and pretty quickly made a decision. I've told this story to folks, new hires, whenever I speak to them. I took over a little over a one-third pay cut to go back to the credit union, um, just because I could not continue to put myself in that scenario where I just didn't feel good. Didn't feel good about what I was doing to the community I was in. Didn't feel good about the way I walked out of conversations with those customers there, knowing that I was not probably doing what was right for them.
Yeah. Yeah, it's really interesting that you say that, Jason, because this is where I think that the credit union industry brings in that sense of honor, where it's you are for the community first and the members first, and it so happens that you provide banking services as a result, right? It's a very different look to it. And so while I think most people don't think twice about it, and it's they're trying to pay a compliment, it's actually not. And so some of the
Hmm.
greatest sales professionals, and the philosophy of sales is supposed to be servitude, right? You're supposed to be helping somebody align up something that they need to fix a point of pain that they have, or take advantage of an opportunity that they can take advantage of, not take advantage of the person for self-interest. So kudos for you for realizing that so early in your career. And I agree. I think that, and correct me if I'm wrong, that seems to be the philosophy that you are, following at KEMBA, and that KEMBA has fully adopted, that it is always member and community first, and you try to find solutions as opposed to try to sell services.
Yeah, I think that's a good point. And one of the things that I've struggled with at times in my careers is whenever I hear like we're not a sales organization, or we don't do sales. And one of the things that I've really enjoyed with my time here at Kemba is we've leaned into that. Sales is just sales numbers are just a measurement of how you're impacting that community and the members that you're serving, right? So it isn't that you had a great loan month, but how many of the dollars that you refinanced were in a loan that was not good for the member or they could not afford long term. And by moving that loan, by moving that deposit to a place that's better for that member, did you sell or did you just serve your community and your membership base to be in a better place long term? And it's that, to your point, right? I think I deal with a lot whenever I deal with more entry level folks. That sales is a dirty word. I'm not a salesperson. I don't do sales. I, what are we selling?
Yeah.
I'm selling a product that makes sense. One of the things I was surprised by whenever I started at Kimba, one of the first things that was mentioned to me is, hey, if we can't find um, a benefit to the member on the loan that you're submitting, we'll turn the loan away. We won't do the loan for the member. And I was like, well, no, but it's good to get the loans, right? Like we want the loans on our book. We don't make money if we don't get the loan. And but we don't do what's right for our members. We don't have the loan tomorrow. We don't have the member to serve tomorrow because we've done these dirty, terrible things to them. And it's transactional instead of relational, where you're creating uh, a generational scenario where members are sending their kids to you because you always did right by them. And their kids are sending, we've been in business for a really long time and we're going to continue that. And I can't do a loan for our bottom line today. I need to do a loan or have a conversation with a member that turns into a 40-year relationship with that member and builds trust long term. I can certainly make $1 today, but if it comes at the expense of a long-term relationship, what good was that?
Yeah, rightly so, and it's leveraging being in charge of digital services. I think that there's a preconceived notion that everything becomes a little bit more cold because we're behind the devices that we're all addicted to. Um, but it's those clever organizations that are going to leverage technology to provide ease of use while still maintaining that personal touch and that outreach. So just because somebody originates a loan in a digital channel doesn't mean that they're opposed to having a conversation with another human being, right? It just meant that in that moment in time, perhaps I was traveling in a Courtyard Marriott and I needed to,
Right.
access, the mobile app or the website and do something before I ultimately got home. And so that doesn't necessarily mean that we can't have a conversation. But I think, to put this into context, there's a great example that we had discussed, in a previous conversation. And with the holidays coming up, you had shared with me a really compelling story about helping out a member during the Christmas holidays. I'd love for you to share that story, with the listeners today.
Yeah, so whenever this is a way back in the day story that I had shared with you before, but I had taken over essentially a portfolio of members from a prior MSR whenever I started my career back at my prior institution. And um, the individual who handed it off said, "Hey, this person comes to me every year for $1,000 loan for Christmas. It's an easy loan. His credit isn't great, but we always do it for him. Just let me know if you have any underwriting issues or anything like that." And I said, "Oh, all right, but like, how long have you been doing this?" And she said, "Oh, last 6, 7 years. It's a easy loan. Like, it gets me, $1,000 closer to goal for the month, and it's good to go." So I met with this individual. He came in right around this time of the year, November-ish, and came to me and said, "Hey, I want to do this $1,000 loan." And I looked at all of his information. I said, "Hey, I want to do something a little bit different this year. I'd like to, yes, figure out your $1,000 loan, sure, but out of your payroll that's coming in every month, I want to put $20 in a savings account. I need your commitment. You're not going to touch it. Out of every pay, $20 goes in." So at the end of that next year, whenever he came back for his $1,000 loan again, um, I allowed him, or I asked him to take what had been saved, the whatever it is, 20 times
520. Yeah.
26,
Yeah.
uh, uh, you know, uh, that those funds, we're going to do the loan for less. And I'm going to take that money you saved, and now we have the reduction in payment uh, on your loan that we're also going to put into that savings account. So now instead of saving 20, you're saving $43 a pay. And after 2 years of doing that, he had the full thousand um, to to take care of himself and not have to do the loan. We had to make some exceptions, right? Our minimum loan amount was, I think it was 500 at the time, and the second year his loan was $232 or something ridiculous like that. So we had to do an exception and to set the payments correctly. But at the end of the day, it was helping him become self-sufficient and owning his own financial situation instead of uh, turning it into. I've been gone. That happened 18 years ago, 19 years ago now, Michael. And I sort of assume had somebody not stepped in and done that for him, 19 years later, he'd still be doing his $1,000 loan. And I'm not saying that to say I'm a saint or that I did anything that anybody else shouldn't or wouldn't or couldn't have done. It's that thought process of what are we doing best for the member and how are we setting up financial independence and financial autonomy moving forward for them, and how as a credit union are are we able to sell the loan and do the loan but also do what's right for the member long
Yeah.
term and create that. He was nearly in tears whenever I left the financial institution. I let him know, hey, you can't call me anymore. I'm gone after 10 years of helping you with this stuff. And he was in near tears because I was his go-to. It's $1,000 loan. That doesn't make that's not making anybody a millionaire. It's not truly making an impact on any financial institution, a single $1,000 loan, but that was his entire life. That was every present for his kids. And all of a sudden this financial autonomy was his that he never thought he could have. And that's the sort of impact that really engaged associates. And I was seeing that dozens of times after that. This is one story of myself, but I was seeing it, I see it hundreds of times with our associates having just that little bit of a conversation, that going to that random fintech to get your unsecured loan or
Yeah.
just talking to the dealer for your indirect loan doesn't have that conversation that creates the best financial situation long term.
Or payday lender because the amount is so small, right?
Yes,
Where the cost
exactly.
is so high. Like I'll be dramatic because I have a flair for the dramatic side. It wasn't about the loan. You represented Christmas to him, right? You made Christmas happen, and you made Christmas happen easier or more affordable or better. I think the hardest part with finance and financial literacy, it is not because of lack of effort. Every single credit union has financial literacy programs. There are people that are dedicated wholeheartedly to it, and I know that they are passionate about it, that their mission is a good one, that everybody invests a significant amount of money. There is a PBS show, probably the most uncool thing that I've ever said, but I've mentioned this before, called Opportunity Knocks, where they find credit unions that work with families to go through this financial literacy. I mean, there is a ton of this stuff that is out there. The issue that we have is that we have created a world that is so instant, click, click, and instant result, and I need it now. Whereas financial literacy or finances, the game of finance, is a long-term one, right? It's $20 a paycheck every paycheck. Well, after a month, to have $40 is not going to be awe-inspiring, but you do it over the course of the year, and then you get used to a $43 deposit. Then you get used to an $83 deposit. Then you get used to a $200 deposit. And by the way, it's been invested maybe over the course of those years. And as the market moves, and all of a sudden, when you look back 20 years later, oh, there's a pot of gold that you've been able to accumulate that may be life-changing for most. It's that long-term commitment that is really missing. It's not the effort or the knowledge. So the reason why I'm bringing this up, kudos to you, Jason, for helping him stick with it, because that's the hardest part of doing it. It's that long-term belief.
One to your one of the things that I probably don't talk about enough. So whenever the high school I went to, so I grew up in southeastern Ohio near OU Athens County, and whenever I was in school, our school in the state of Ohio was the number one school for free for percentage of kids who were on free or reduced lunches. So I came up in my life in one of the more economically depressed areas in a state that's not classically been, we're not over here creating, billion-dollar industries left and right, right? Ohio's sort of usually middle of the pack from an economic development standpoint, and I was in the poorest section of the poorest county at the time. And you see a lot of the people that I grew up with that were not getting that financial education, did not understand finances, and I am 1000% just lucky that I happened upon an internship at a financial institution, and that I learned this stuff as a 19-year-old. That's all luck. It has nothing to do with a skill set or that I'm smarter than somebody else. I got lucky. And if I had this opportunity to get lucky, and so many of our associates, so many of the people that we work with on a day-to-day basis, they also got lucky too, to be able to be heaped all this financial education and knowledge. Who are we not to hand that off? Because I don't think it's okay for the next kid who is in my place, growing up in an economically depressed area with, parents that may not be, financial industry experts, to not have somebody whenever they come knocking asking for help. They need to have somebody that cares and that is willing to put that time and effort in to support them, knowing the things they need to know to be financially independent long term.
Uh, Jason, now, I mean, if anybody wants to know why I love talking to you, that response is just golden. So my father used to say, you got to be good to be lucky, but I think it's better to pass on the luck that you've received, which I'm going to use this to pivot, because this is where I think your new role that you're in tries to leverage technology in order to reach out to more members so that you can ultimately create that relationship and help guide them the way that you were just speaking. Can you unpack how KEMBA is looking at, or how you guys are specifically deploying different types of technology and technology that falls under your scope to help with communication, to drive that growth, to improve the member experience? Can you help unpack some of the projects that you're leading?
Yeah, so I think there's a couple of things that you can kind of go backwards looking and forward looking with that. I think looking back, we've talked a lot about our ITM deployment and moving forward with that strategy. And candidly, there was hesitancy and pushback from the membership base whenever we move forward with that. There's Whenever you look at it, we were in with peers that I've talked to, we
Right.
were very unique in the way that we deploy. Where I was talking to another credit union just this week, and they went half in, half out, right? We kept our teleline, but then we had ITM sitting in the corner, and we did not do that. We just, teleline's gone. This is the branch is all ITM traffic today. And that strategy did help with overall adoption. You're still going to have your outliers, but what that allows you to do moving forward is we put up a kiosk in a completely underserved area of our network, that now you can have real face-to-face interactions immediately if you need it, in an area that would have been difficult to go to a branch. And we're going to be adding probably I know one more is on pipeline for early next year, but moving forward, multiple more of those are easy to just pop up. And now you have personalized service in an area of our network that you would not have been able to get that before. It also allows you, whenever you branch expand and move into a physical market with a full branch with, your normally that's going to be a staffing nightmare. If you're
Yeah.
moving into an area where you don't have a footprint today, well, I can throw a branch up and throw those drive-through ITMs in today and start to soft launch it. And I don't have to change my staffing model to allow for that branch to go up. I don't have to go find 6 tellers to staff that building. I already got them in one of our ITM centers today. So it allows for this expansion of service to areas that our members didn't even know they needed or wanted that service. I think moving forward, the biggest focus for us right now is members are choosing to utilize fintechs. Like, we can play around and say, no, they're always going to just continue to come back to us into our brick and mortars, but they are continuously choosing to utilize fintechs. So how can we reduce the barriers of service, make it so our members are able to interact with us when, how, and why they want to, right? When they want to, they have immediate service, whether it be through a medium like this, where we're seeing each other on video, whether it be talking on the phone. whether it be an easier way to apply online, working with the right fintech partners, to make that walking into our digital branch as easy as it is to walk into our physical branch. And I think too often you run into well, we used to do it this way. We used to do it that way. We always got used to do this. Well, I think our admin rules that say this. Well, who wrote the admin rules? We did. So like, let's change them if we need a way for our members to be served better. So it's really the focus moving forward is how do we make that digital journey as easy as the drive to the branch that's 5 minutes from our corporate office, right? How can we make it simple enough to just pick up the device that all of us are addicted to and to do the banking when, where, and how they want?
Yes, that's that line, meet members in the channel of choice, and change is so difficult. Yeah, I recently did a webinar and was talking about change, and I was kind of doing a little bit of research, and there's no shortage of the psychology of why people resist change, but then there was one that I came across that boiled it down into three pieces. I don't like it, I don't understand it, I don't like you. That's what it came down to.
Yeah,
And that third part made me laugh because, again, like being in sales for so long, I mean, how many of us, and myself included, like you have an opportunity to buy something, like even the shirts off our back, right? Like you walk into a store, what's the worst thing that can happen is that sales associate immediately is, right in your face asking you, what do you want? And like, give me a second. Let me just, let me take in the store for a second. And if I'm on a mission where I have to buy something specific, I'll probably be a lot more engaging. But it's meeting the person where they are, helping to get from point A to point B that I think is so so important. And if you can do that in a digital sense, like on a device, anytime, anywhere, then the more significant conversations, and it could be something like, I'd like to get a mortgage, the biggest expense that I have, or, something of a deeper hardship. If I have that relationship, digitally where you guys are easy to work with, you're always answering, the questions that I have. And it's so like, you're the guy that I go to, right? And now that's exactly what you want so that you can help direct them to the right products as opposed to just trying to make a buck on the financial side of things.
right. And I think so to that like hesitancy and I don't like you, right? We
Yeah.
we struggled with our ITM conversion. um, with we sort of took two different tacks on how we would launch them out to the branches, right? So in one iteration, we went all out, right? So at there are multiple senior level leaders on the first couple of weeks of launch that are there physically every day, talking to members, telling the why, telling this is how this is going to service you today and into the future. We changed our drive-through hours from the branch hours, so 8 to 6 to 7 to 7. That cannot happen physically. You can't do it
Right.
without that ITM technology. It's just not possible from a FTE standpoint, cash handling, all of that fun stuff. It's just not possible. So how do I explain that these wins are coming down the line, and how do we keep that messaging firm and thorough with every member every time? And then we also had some branches that hey, we think this membership base is going to understand the change a little bit more. We don't need to put as much effort into that, having so many FTE there to explain it. And those branches struggled with adoption. They struggled with it, net promoter on the back end. And
Yeah.
that's because how did you explain it? Do they like you? Do they trust you?
Yeah.
They just lost their teller Pam that had been their teller for the last 3 years. How are you convincing them that literally, if you touch the screen, there's like a 1 in 12 shot you're going to talk to Pam? Like it's okay. Like she's still here. We didn't shove her inside of the box. She's just down the street at one of our locations, and she'll pop up and talk to you every once in a while, which
Yeah.
was legitimately a question we got a couple of times if people were inside the boxes of the ITMs. But yeah, but it's how do you confirm for the members that wins are coming, the consistency of service, the efficiency of service, the utilizing. At the end of the day, machine, FTE, all that is our members' money that they're trusting us with. That ROA that we're making is the expenditures we have on that. How are we utilizing their dollars in the best way possible? And this allows us to create efficiencies across network. And
Yeah.
whenever this branch wouldn't have had anybody, and this branch has a line out the door, now I can reallocate these associates to help that branch at that moment and support the member needs. And how do you get that messaging out there to help
Yeah.
them know and believe in the idea?
Yeah. It's almost like we agree. Pam is so great. We want Pam to speak to more members, and this is how, right? Like, yeah,
Exactly.
we don't want Pam to go away. And no, we didn't Honey, I Shrunk the Kids and stick Pam into a computer or into a box. But I think in the South, they would say, bless their heart. I'm pretty sure. But no disrespect. I mean, it's new technology, right? Like everybody has to ask questions as to how it's going to work. Look, I think the whole piece of trying to marry the empathetic communication and technology falls in line really, really well with what we try to do on the collection side as well, right? But what I think you guys have been able to tap into, which has been kind of the gold at the end of the rainbow that everybody has been chasing, that you guys seem to have higher converting numbers. And where I'm going with this is, your success in converting indirect loan members to having more than just the typical 1.2 products, which is the, car loan, of course, and the negative share account. And the reason why 1.2 is because they bottom out and then after 45 days they close. And so we don't even have the two products that the member started off with. But this indirect loan portfolio has been, traditionally a worse performing portfolio for
Mhm.
many credit unions because of the lack of the relationship, and product penetration or getting that generational relationship has been a significant challenge to a lot. But you guys are seeing success. I want to highlight that. So Jason, take us through the strategy, what you guys are seeing, share any tidbits that you can, because I think that this is a widely important one.
Yeah, so this was one of the nuts that was especially difficult to crack that we talked about for a long time. And so we do have a relationship pricing model. We call it Advantage here, where we give rate discounts to members who are more fully engaged and are completing a few different types of tasks. And um, really, we struggled with how do we do something similar on that indirect channel to drive volume from that group and can give them the carrot, right? We tried any number of things, whether it be just some sort of cash bonus for opening a checking account or whatever, right? I think everybody's seen those sort of ideas floated out there, and the number one thing I heard whenever I talked to peers was, "Yeah, we do that," and then they take the money and they walk away, and we never hear from them again. So we leaned into that relationship pricing model and said, okay, if you establish a checking account, you do the things that we ask our Advantage members to do, we will subsequent action a reduction in rate on your indirect loan. Which now I candidly, there are some scenarios where that 0.5% rate reduction is probably less than if I would have handed you $500, but because you're getting the benefit at the back end of completing this task, I've gotten over the barrier of change and getting you to start utilizing our services and understanding that, hey, you know what? I actually do like talking to Pam at the teleline. I do like talking to the virtual agents. I do like the guy whenever I walk into the Westerville branch. I like all these people. I'll kind of stick with this. And we've seen. So we launched the program, gosh, in September of 23. And from there, we've seen around a 37% increase in overall average share deposits from our indirect, the totality of portfolio, about a 40%-ish increase in overall checking penetration. And then of that, about a 15% increase in actual engaged members in that portfolio, right? So you're seeing it isn't just a shell checking that ends up opening up. It's actually engaged membership that has direct deposit, that's using the debit card, that's adding additional products. And you can sort of see it across the board, whether it's HELOC penetration in the group or credit card penetration in the group. We saw all those sort of shoot up. And it was just trying to be creative to solve a problem that every credit union I've talked to sees the same problem. And how can you get creative? I will tell you, it was not an easy process, whether it be dealing with any sort of potential UDAP concerns, or what are you doing from a regulatory perspective to make sure that the rate changes correctly, and how are you batch processing these, and who's monitoring the program, and all those things. It took 6 to 8 months of driving, of just working through the regulatory and making sure we do it right hurdles. But it came down to just, can we be creative? Can we come up with a creative idea, changes something that moves the needle slightly? Because continuing to just look at it and saying, oh, well, we really need to figure this out, doesn't get anything done. And I think I said this before, but doing what you did before will get you the results that you had before. So do something. Yeah.
It's those numbers are phenomenal. I would highly suggest rewind the tape, guys. Go back 40 seconds, replay that just to listen to Jason's numbers. And the reason why this had come up, I'm incredibly proud that Eltropy had a hand to play into that, because we helped initiate a lot of the messages. Anybody listening to the podcast, you know that I am very rarely bringing up, our piece to this, but the conversion of the indirect loan portfolio is such an important one. It's the one that is the most bruised when it comes to collections. They're the worse off performing versus the direct lenders, and there's been a big campaign to try to bring them into the fold. And the idea is, once the car loan is done, goodbye, and you never see from them again. And the whole point of that is that, new member acquisition runs anywhere between $400 to $700. And so if you're able to do it for far, far cheaper, that means just all that much more reinvestment back into the community, back into the members. That is exactly where we want to go. And I'm hoping that we get to replicate this, with many credit unions, because that would be the ideal, kind of outcome to this. If you had a piece of advice to share to a credit union leader who's currently looking at either flat or declining indirect portfolios, where do you start? Because like you said, this was a journey that it wasn't easy to do. There was a lot of work that was put in. What is step one? What would you advise?
I would say a couple of things. I think finding somebody that's passionate about fixing it is your biggest hurdle. Because one of the things that I know, as I worked through this process, there were a lot of no's to be had. And having some level of resilience in whoever is assigned that project, to say, okay, well, that's a good no, but let me be creative on how to fix it. And I think the second thing is that creativity and out of the box thought processes. Uh, I know I said it before, but
Can't do
we
the
are in
same.
a legacy business that
Yeah.
does a lot of things like what was done whenever I started in the industry. And I'll say it again, if we do what we did, we're going to get what we got. And if you're not having people who are pushing the envelope slightly, not creating a regulatory issue or creating some sort of major problem that's going to have the state knocking on your door to ask if they need to do some additional work on your audit. Uh, but somebody that's will find folks in the organization that are willing to say, these problems are not okay, and I care about doing what's right for the totality of our members. It, at the end of the day, Michael, if I'm doing a loan for this indirect member, yes, sure, I'm getting their loan, but at some point, if your loan to share gets close, is that stopping me from being able to do a loan for the fully engaged member potentially, right? Or buying deeper from that membership? So what is our overall totality of membership getting out of that program? Is that indirect program doing something for the totality of the membership? And if it's not, figure out how to fix it so the totality of her membership is benefiting from that decision we almost all are making of having an indirect relationship. How's the membership going to benefit?
Yeah, 100%. Well, here's the pivot to the technology that is the most up and coming, the two letters of the English language that are probably the most abused over the last 12 months, AI. What is your perspective, and of course KEMBA's approach to AI and the future of the member experience. And so how are you tackling this? Because I think this falls under your purview as well.
Yeah, I think it continues to be a difficult question for all of us, right? Like, at what point is it associate assistants? At what point is it, RPAs to create processes that are taking uh, drone on work away from people to be able to allow them to do more high value stuff? At what point is it actually member facing and allowing the member to interact, and what what are you trying to do to ensure that that doesn't turn into a whole different problem?
Yeah.
I would say we're still relatively early, but getting into the use cases, right?
Yeah.
In my opinion, and I think there are probably a lot of opinions out there, you have to start with very clear and defined use cases and not just say, one of the things that 2 years ago I heard at a conference, every board is looking for AI. How are you going to add AI? How are you going to add AI? Well, uh, well, I don't know. I probably need to come up with the right use cases that will create very defined and firm outcomes. And what are those outcomes going to be? And how do you find the right vendor partners? Because one of the other things that I think anybody in the space knows is every there, everybody I talk to now, every vendor I've spoken to wants
They've
to
all got
immediately
AI.
talk about their AI implementations that they're doing. And I, I was just calling you to understand how you do USPS validation, right? Like, I don't need to know about your AI model that you're building. Like, I just need this one very simple thing. But finding the right partners, finding partners that you can trust and that will support you in the use cases that are most important to you, becomes more important than ever, because if you cannot trust the AI partner, how can you trust the AI that you're receiving from them?
Yeah.
So building good partnerships with people you can trust, with vendors you can trust. I feel pretty confident that most credit unions are not developing their own LLMs on their own. But how are you finding the right partner that's finding the right use cases, is hearing your problems, is hearing what you need, and is then solving the specific use cases as you continue to roll out? One of the things that's going to be tough as a credit union industry is that our members are going to continue to think of us as their small credit union, as their neighborhood credit union. And how do we not lose that while also benefiting from the all the efficiencies that come along with the revolution that is coming? And how do we not get left behind whenever the Chases and the Wells Fargos of the world have all of a sudden done away with all their employees, and they're able to get done a lot more with a lot less people? How can we at least fight a battle with that?
Yeah, and look, going back to the case study with the ITM, you mentioned it yourself. One branch having high volume of traffic, another branch having lower, volume of traffic. You can still now repurpose that, FTE to be able to help handle the overload at branch B versus branch A, solely because of that ITM network that now PEM can be in three places, at the same time, and that's huge. And so, to your point, I think you hit the nail right on the head. It's the business case first, right? AI for the sake of AI doesn't really make any sense. And to your point, the partnership is incredibly important because AI is a blank canvas, right? It is only as smart as the brain that you create out of it. So think of like that Frankenstein piece, like your
Hmm.
inject personality of what your AI tool is going to be. And everyone's AI tool is supposed to be different because it's supposed to be self-contained, right? This is not ChatGPT that's out there. These are your policies, procedures, your pieces that are specific to KEMBA. And it's a KEMBA brain AI that is supposed to speak as if this was an artificial intelligence of KEMBA, which would be different than every other credit union that's out there. So yeah, I asked that question, Jason, and you knocked that out like a home run. And to be fair, I wish it was a home run for the Jays, not the LA Dodgers. That would have been fun to see that piece. Um, But to get more serious, Jason, I know that we got to see each other in Wyoming. We've had multiple conversations since. I think you are always one of the first to volunteer to have conversations. I know that we've got less than 60 days left before the end of the year. My God, it's happening so fast. Are you going to
Crazy.
anything else in 2025, or do you have anything slated in 2026? Where are you going to be?
Nothing currently in 25. I've got a couple of things on roadmap for 26, but still, I am. I think we talked about it to start. The role change has really made budget season a lot more fun this year. So trying to both manage the new budget season and what that means for me today versus what it did in my prior role, and trying to figure out what next year's travel calendar looks like. Still a little bit of a challenge, but getting there. Yeah.
I love it. Well, I have no doubt we're going to see you on the road at some point.
Yes.
So if it's not too much trouble, I'd love to post your LinkedIn, a link that's in there. I know that you've always been very open about having conversations, and I will tell you guys, have a conversation with Jason. He is a super nice guy, incredibly knowledgeable. And again, a big congratulations in your new role. And a thank you for championing, ethical sales, where I think, the more of us that do it that way or approach it that way as a solution-based, conversation as opposed to a revenue-based conversation, just makes life a lot nicer and a lot easier and gives people exactly what it is that they want. So I'll give you the last 20 seconds here, Jason. Anything you want to plug that you're doing specifically, any initiatives that you're tackling or anything that KEMBA is doing? That you wanted to kind of highlight?
Yeah, I think the next couple of years, one of the things that I'm excited about just at a high level is we're going to be going through. We brought on our CEO retired last year, and we brought on a new CEO, which is an exciting time. A lot of leadership changes that just creates a lot of opportunity organizationally to move forward in a direction that allows us to think about things differently, look at our processes, look at our systems to find the right way to move forward. So that's really this role in a nutshell, right? Is how do you build the right solutions moving forward? And yeah, there's some of them that are still in some contractual talks. So I'll be a little bit cagey there, but I know that there will probably be a lot of conferences that I'm at with some of the vendors that I'm working with today on contractual stuff that really will allow me to meet new people and find new ways to serve our members. And I think that's what it's all about, right? Is what are we doing to create tomorrow's credit union? What are we doing to find the way and path forward from here? Because the industry's important to our overall banking environment, and how do we make it the best it can be for our members today and our future members tomorrow?
Couldn't have finished with a better introspective question than what you just laid out. So on that note, Mr. Jason Johnson, thank you so much for joining the Eltropy Exchange. Quick shout out to Pam. You are seen, you are recognized, you are teller extraordinaire, and the members love you. So keep up doing what you're doing. And a big thank you to KEMBA for the continued effort that they're going through. So Jason, thank you so much for joining us today. It was a pleasure having you on board.
Yes, thank you very much, Michael. I appreciate it.
All right. Join us next time on the Eltropy Exchange. Until then, stay connected, stay empowered. Talk to you guys soon. Have a great one.
Thanks for listening to this episode of the Eltropy Exchange podcast. For more insights and resources, visit us at eltropy.com. We'll see you next time.